Believe it or not, the average American household generates between 6 to 8,000 sheets of paper every single year. When tax season ends, most of us take the resulting paperwork and shove it into a filing cabinet or a basement box. We hold on to decades of old returns because we are terrified of an IRS audit, trading our valuable physical living space for a perceived sense of safety. But that hoarded paper is not a secure archive. It is a localized, unencrypted database containing your exact income figures, your physical signature, and your social security number. This unique 9-digit identifier tracks your earnings. In a single year, identity theft affected approximately 1.1 million Americans. The leading contributor to that financial fraud is improperly discarded physical paper. Tossing those financial records into the regular trash or leaving them in an open recycling bin leaves your data completely accessible to anyone willing to look. To protect yourself, you need to know the exact legal expiration date for your paperwork, and you need to calculate the most mathematically efficient way to physically destroy it. Holding on to these documents indefinitely doesn't keep you safe. It simply turns your home office into a compounding liability waiting to be exploited. To find that expiration date, we have to look at the federal authority that dictates tax document retention. This timeline shows the definitive standard for tax documents, the 7-year rule. The Internal Revenue Service generally has 3 years to audit a return, but that window extends to 6 years if they suspect significant underreporting. Keeping your returns for exactly 7 years covers that maximum audit window. That 7-year rule also applies to all supporting documents. That includes receipts, W-2s, and 1099s. A W-2 is a standard form reporting your annual wages, while a 1099 reports income from non-employment sources. Pay stubs require a much shorter timeline. You only need to keep them until your annual W-2 arrives and you verify the numbers match. Once verified, those pay stubs should be destroyed immediately. Bank and credit card statements should be kept for exactly 1 year. The only exception is if they support deductions claimed on your tax returns. In that case, they join the 7-year pile. There are a few specific documents that bypass these expiration rules entirely. Social security cards and property deeds and vital records like birth certificates must be kept permanently in a secure safe. Once a financial document crosses its specific legal expiration threshold, its utility drops to 0. At that exact moment, it becomes an active identity theft risk that requires complete destruction. Executing a 7-year purge is a massive logistical task. Accumulated tax returns, bank statements, and investment records easily amount to 4 to 6 banker's boxes, totaling thousands of pages. Standard consumer home shredders are not built for this volume. They process 5 to 10 sheets per pass and require a 20 to 30-minute cool-down break after just 10 minutes of continuous operation. Processing just one banker's box through a home machine requires hours of manual labor. Clearing a 7-year backlog easily consumes your entire weekend. This diagram shows the critical security flaw of those consumer machines. Most home shredders create 7/32" vertical strip cut ribbons. As security research studies have proven, these strips can be visually reconstructed by a determined thief. Professional industrial shredders produce 1/16" microcut particles. This process pulverizes the paper into confetti, making physical reconstruction impossible. Local drop-off shredding services eliminate the manual labor. You can bring your boxes directly to a facility with no appointments and no minimum volume requirements, and the total drop-off process takes less than 20 minutes. Clearing a 5 to 6 box backlog professionally costs between $150 and $240 out of pocket, based on flat weight rates starting at 99 cents a pound. That professional route also guarantees that 100% of your material is recycled. Recycling a single ton of shredded paper saves 17 trees and 7,000 gallons of water. The upfront financial savings of using a DIY home shredder are an illusion. You pay for that small saving with a massive drain on your personal time and a severely inferior security outcome. For small business owners, stakes shift from residential clutter to severe commercial liability. Operating a business introduces an entirely different legal landscape regarding data privacy. In Massachusetts, businesses are governed by a stringent state regulation known as 201 CMR 17.00. CMR stands for the Code of Massachusetts Regulations, which compiles all administrative laws published by state agencies. Under this law, businesses that fail to render resident data unreadable and unrecoverable face crippling penalties. A single violation can cost as much as $5,000 per incident. The greatest threat to this business data often comes internally. Disgruntled employees can easily access discarded client lists or sensitive payroll data if it is left sitting in a standard trash can. To neutralize this threat, businesses rely on scheduled off-site shredding services. These providers install secure, locked consoles directly in the office and utilize background-checked handlers to maintain a strict chain of custody. At the end of the process, the business receives a notarized certificate of destruction. This document serves as the ultimate proof of compliance for state audits and federal HIPAA regulations. HIPAA is a federal law requiring the secure handling and protection of sensitive patient health information. For a regulated business, professional shredding operates as a mandatory, recurring insurance policy. It guarantees legal compliance and protects your brand reputation from catastrophic data breaches. To solve your own paper accumulation bottleneck, you need to select the destruction method that matches your specific situation. If you generate 1 box of paper or less per year, primarily managing daily junk mail and routine utility bills, you fit the profile of the maintenance purger. For that low-volume, ongoing daily flow, a high-quality cross-cut home shredder is perfectly sufficient to keep your data secure. But if you are a homeowner facing 4 or more banker's boxes of tax and financial documents dating back past that 7-year window, you are a backlog clearer. As a backlog clearer, your most efficient path is to use a weight-based local drop-off service. You trade a small flat fee to instantly eradicate your multi-year accumulation and buy back hours of your life. Finally, if you operate a medical, financial, or professional office managing high volumes of active client and employee files, you are a regulated business. Regulated businesses must immediately outsource their document destruction to a certified scheduled provider. This secures your chain of custody and ensures you receive that critical certificate of destruction. We live in an increasingly digital world, but the sensitive data printed on your physical paperwork remains a highly targeted, active threat. Applying the 7-year rule and precisely matching your paper volume to the right destruction method provides the only logical way to definitively protect your identity and reclaim your space.